equities, we all know we're not supposed to look at short-term returns. Equity is a long-term story. But nonetheless, a lot of investors do go online and they check the 3-month return and the 6-month return. And then you realize almost every single fund is probably in negative territory.
Any new investor who came into the mutual fund, or they started doing their SIP, or they invested lump sum, and you know, large number of investors have come in the last 1 year. They might be unnerved by what is going on. But I think, you know, any investor who has been there for a little longer will understand that this is how it is, and this is how it has always been. I actually went back and saw the 20-year performance, annual performance of all the small cap funds. And what I find is that every year, without a fail, the difference between the highest NAV and the lowest NAV is anywhere between 20 to 40%, which means from the highest level during the year, these small caps lose sometimes 40%, sometimes 30%, sometimes 20%. But despite that, the 20-year average return of small cap fund is little over 19%. It turns out to be the best performing category over such a long period of time. That, you know, the reward that investors get in small caps is not because of great small caps, but it is a prize for, you know, being able to withstand the madness of these small caps every year.